Hey, welcome in. This is Terry Barr with Terry Barr Real Estate, terrybarrealestate.com. I'm with Coldwell Banker, Global Luxury. This is going to be the first installment of a series of educational podcasts or educational videos. I recently went through my continuing education credits, and I chose 1031 exchange because it's always something that interests me. I'm always looking for an intermediary or someone that can do these, and I happen to come across this next guest. Her name's Margot McDonald. She is with the 1031 Corp group, and she teaches the class. And so I sat through a 3-hour class. No, this is not going to be 3 hours, but we're going to take her one pager, and we're going to go through it. She's going to hit on some highlights. I've been in the business for about 15 years. I was in business before that, about 15 years, and I learned three things that were very important that got my wheels spinning. So if you're a real estate investor, if you're a business owner with real estate properties, this is going to be great for you. It's going to really give you some highlights and then allow you to say, maybe I need to talk to Margot, or obviously talk to Terry, and we can get you in touch with Margot, and she can walk you through the gritty details. But this is going to be a 20, 30-minute opportunity for you to learn some things maybe you haven't learned already. So I want to welcome in Margot McDonald from 1031 Corp. She is our guest today, and she's going to get us all squared away on 1031 exchanges. Welcome in, Margot.
Great. Thanks, Terry. Thanks for having me.
So what I want to do today, Margot, is I want to just start off by, a lot of people have heard 1031 exchanges. It is a code in the IRS code. And I want you to give an explanation of what a 1031 exchange is, and then we're going to talk about the benefits, the details, and how to get one started.
Sure. So simply put, it's the way for the seller of any type of business use or investment property to defer the gain when they want to buy another business use or investment property. It's just like the regular sale of one business use or investment property, followed by the purchase of another, but it's linked together by the 1031 document.
So when you mean defer the gain, are we talking for tax purposes is generally what we're talking about?
Yes, we're deferring the state and the federal income tax, capital gains. We're also able to, in most cases, defer the depreciation recapture.
Okay.
As well.
So I want to get right into the benefits now. Some of the benefits you just talked about, but there are a couple other benefits I want to talk about. The ability to acquire real estate pre-tax dollars and estate preservation. I want to talk a little bit about that. And tell me, I guess, and one of the other things on your list was less management responsibility. I'm not sure what that was, but so you talked about the immediate tax deferral. Talk a little bit about acquiring real estate with pre-tax dollars.
Right. So rather than paying the tax and sending that check to IRS and to Harrisburg, you get to keep that money invested in real estate. You take what you would normally pay in tax, right? You're using those pre-tax dollars to buy something else. So that money continues to appreciate for you. It's still invested in real estate, and it will continue to grow. When you do a 1031 exchange, you have the opportunity to buy anywhere in the U.S. Any kind of property held for business use or investment will work. So you have the flexibility to mix and match the kinds of property, the locations of properties, the number of properties. So for example, if you sold a property in Harrisburg, you could buy a property in the Poconos. If you sold something in Florida, you could buy in Alaska.
So it's not state related. It doesn't have to be state related. It can be anywhere in the U.S.
And anywhere in the U.S., you could go from commercial to residential, residential to commercial. You could sell 3 to buy 1, or sell 100 to buy 1. You have a lot of.
So one of the things I equate this to is now I'm from the financial world. I was a financial advisor, stockbroker for many years. And I equate this to something like a 401k when it comes to financial assets, because if you're moving those 401k investments around in a 401k or an IRA, those are all tax deferred. So you can buy a stock and sell a stock inside of that and not have to worry about the gain or paying taxes on it. Otherwise, if you're outside, let's say you're in an investment vehicle that's just held in an individual account, and you sell that investment, you're going to have to pay tax on the gain before you reinvest. So what you're saying is, in essence, this is kind of like a real estate 401k. As long as you're trading inside the rules, you can defer those taxes till later on in your life.
That's exactly
Okay.
right. If when those 401k funds aren't performing, you move money
Right.
around and you don't think
Right.
twice about it. This is a way for investors to do it with real estate. And what's great about 1031 is you could do a 1031 exchange in 2024, and then maybe in 2027 you find something else that you think will be a better fit
Right.
for you. You can exchange again and defer the gain even more. And every time you do another exchange, you're just continuing to grow your real estate portfolio with pre-tax
Well, that's
dollars.
interesting. Now,
If
oh,
you
sorry. Go ahead.
do
Go ahead.
No, I was just going to say if you did an outright exchange at some point, that's when that tax would come due. But if you hold on to those properties for the rest of your life, you do exchange after exchange, you have the benefit of all those pre-tax dollars working
Hmm.
for you, then someday, unfortunately, we all pass away. And when you do, your heirs inherit all of your assets with a step up
Now,
in
to explain
basis.
some,
So whatever,
explain to the viewers what a stepped up in basis. I know what that is from my financial days, but help them understand what a
sure.
stepped up basis means.
Absolutely. So a step up in basis means that your heirs inherit the property at the current fair market value at the time of death. And all the gain that you deferred using 1031 during your lifetime is all forgiven at that point in time. In 2024, the first $13.61 million dollars of someone's estate is exempt from estate
Gotcha.
taxes. So 1031 could have been the way that you build your wealth, preserve all your equity, and then pass it to your children potentially without any federal
Yeah.
estate
So the
taxes.
idea is for those, if you're, kind of dumb this down to simplify it in my words, because I have to think about things in analogies. If you paid $100,000 for a property and now it's worth $500,000, that value, if you were to sell it today, you'd have to pay taxes, federal, state, on the $400,000 gain. So in the case that we're having a property that we've got a large amount of value that we built into that piece of property, if we hold that and pass that on to our heirs, that $400,000, now we're inheriting that at $500,000, and we don't have to pay the taxes on the 400 at that point. So that stepped up basis now steps up to the $500,000. I'm assuming that's what that means. Okay.
Yes, that's exactly what
Okay.
that means.
Correct. Now, this has some rules that we have to play by. In order to get these benefits, the government says you have to play by some rules. One of the questions I have is it has to be a like type property. Now, it has to be investment property. I think what you said, investment or business use. So one of the big questions that I had is, what if I have a business that I'm running outside of my home? Does that qualify?
Yes, it
Okay.
could. So if I understand you
Hmm.
correctly, if you have something that your primary residence and you're using part of it
Yeah.
for
Sure.
business use, then yes, that would
So
absolutely
tell
work.
me about how that works. In other words, does the whole property qualify for the 1031 exchange?
Only the investment
Okay.
portion of it. But the rest of it, if it's your primary residence, when you sell a primary residence, if you've lived there for at least two of the last
Right.
5 years, you're entitled to exclude up to $250,000
Right.
of gain, 500,000 if you're
Right.
married
So what
filing
you're
jointly.
saying is then in most cases, I'm assuming, unless we get into high dollar examples, you're going to get a deferral. You're going to get a forgiveness of tax anyway because you have those $250,000 we'll call them
Correct.
coupons. I call them coupons, one for a single person and two for a married couple. So that might not come into play
Right.
until you got over that $500,000 exemption.
But if you have used that portion of your primary for your
Right.
business use, and you've taken
Right.
depreciation on that, and you've been showing that, let's say, 1/10 or 1/8 of
Right.
your house for investment purposes, business use purposes, when you sell, you can't use your exclusion
Okay.
for that. So 1031 would come into play, and you would be able to, when you sell your primary residence, take that 1/10 or 1/8 of the
Mhm.
value of your home and do a 1031 exchange with that, and be able to do that in a new home that you might purchase, or just to buy a small office building where you would want to
Gotcha.
move your
So
business
that leads
into.
me to another question. Um, has to be used as an investment or like property business use.
Right,
So I want to get into the details of what rules we have to follow, and we're going to do that briefly. But tell
right.
me about a property. Let's say that I have a $500,000 office building, and I decide it's time to move over to something else, and that property that I move over to theoretically is 400,000. Can I still do that? And just pay the taxes on the $100,000, or how does that work?
Yes, Terry, that's a great question. In order to maximize your tax deferral in a 1031 exchange, you do want to buy something that's equal or greater in value and equal or greater in
Okay.
equity. So if you sold for 400,000, and let's just use a nice easy round number and say you had $25,000 of
Right.
closing cost, your net selling price would be 475. So the new property, including closing costs, should be 475. If you only bought for four, you would pay tax on that $75,000 difference. But it would be important to run the
Sure.
numbers with your accountant to make sure there were tax
Right.
benefits to you, because maybe your gain wasn't
Yeah.
$75,000. So you'll want to make sure that the exchange makes sense in that
Okay. So that
situation.
makes sense. And I appreciate the explanation there. So, in order to do a
Absolutely.
1031 exchange, we've got to follow some of the rules that the government or the IRS puts out there for
Yes.
us. And one of the rules, and you can explain this, we have 45 days. Well, let's start over. I'm going to let you start. You have to
Good.
do. You have to start or initiate this paperwork before you go to closing. So tell me,
Yes.
start at the
So
beginning, and let's hit some of those points.
sure. So, Terry, the regulations require you use what's called a qualified intermediary, and that's an independent party whose sole purpose is to facilitate your 1031 exchange. They're an independent party. They can't be the real estate professional, attorney, accountant, financial advisor. So, as a qualified intermediary, we have to be in play before the title to the old property is transferred to a
Okay, so
buyer.
let me
We
stop you there,
can,
because I can tell you this.
yes,
This is not an easy thing to find. This service is not an easy thing to find until now for me. I've got lots of people over the last 15, 16 years that have talked to me about 1031 exchanges. And, my answer to them is, well, I have to find somebody to execute this. And that's harder than it looks and harder than it feels. So when I took your class, what you helped me realize is they have to be a qualified intermediate. They can't be just an attorney that does them. They have to be qualified. Before you move on, tell me what qualifies an intermediary.
so, in order to be qualified, we just can't be an agent of that
Gotcha.
taxpayer. So, we can't be your attorney, your real estate professional, your
Okay.
accountant. So, but that intermediary needs to be in place before you transfer
Okay.
title. So, you have to enter into an exchange agreement with a qualified intermediary or QI at or prior
So
to
this can happen
closing.
right at closing
Right?
if we know who it is.
And
Okay.
Right. And most times it's set up well
Gotcha.
in advance, right? I always recommend talking to a qualified intermediary anytime you have
Gotcha.
questions. But once you have a signed contract with a buyer, there is a closing agent working on a file. That's the time to initiate the exchange and reach out to a
Gotcha.
qualified
So we have
intermediary.
this paperwork we've got to get done. It can be well in advance, which makes sense to me to get that all squared away before you go to closing. But
Yes.
it could be theoretically at closing if we want it to be. And then once we have that, and give over title to the new buyer. Well, I know there's some other,
Right.
we're giving up through the giving title over through the intermediary. The buyer has to agree to it.
Right.
The new seller's got to agree to it, so on and so forth. But
They just need to be
yeah,
advised. They don't need to actually
okay,
agree
all
to
right. So they need to be
anything.
advised of what's going on. So we close, we make transfer. Tell me the next step and how much time do we have to
Okay.
do that?
Exactly. So beginning on the date that title is transferred to the buyer, then the exchanger has 45 days in based on calendar days, not
Okay.
business days, to identify
And what
replacement
happens to the
property.
funds before we get too far
So,
ahead? What happened? Yeah,
oh,
what
I'm
happens to the
sorry.
funds?
The qualified intermediary will have control of
And what
those
does that
funds.
mean
So
technically?
we will receive, the qualified intermediary, I can't
Yep.
speak for all, but I can tell you
Okay.
how I do it. We set up a bank account for the benefit of that exchanger. It has their social security number or EIN number attached to it. And we direct the closing agent to wire those funds directly to that
Okay.
bank account. It is, I call it direct deposit for the replacement
Okay.
property. The money is just waiting for the purchase of the
And
replacement
is that
property. If
before I
we
get, is that
enter
controlled by you, even though it's identified
it,
as owned by the owners?
yes, it is controlled by
Okay.
us unless we enter into a three-party agreement with the bank, and then the bank would actually control the
Gotcha.
funds and look for written authorization from the exchanger and the qualified
Gotcha.
intermediary saying, hey, it meets the 1031 requirements. You can move the money according to our joint instructions. And that would be to wire the money for maybe an earnest money deposit or the purchase of that
So
replacement
for
property.
everybody out there that's thinking about, okay, I'm going to give up my proceeds from this sale, they're going to go into an account which you have ownership, the seller has ownership of,
But right, it has their name and
and
social security
as in,
number attached to that.
technically and on paper, but the control of those funds are based upon, a
Mhm.
contract, are the intermediary or the third party, which is the bank. Is that correct then? Okay.
Correct.
So we
Yes.
so we do that.
Yes.
We get them transferred. We get the money into the account. How much time do we have to identify another
So
property?
that's that 45 days
45
to
days.
identify the replacement
Okay.
property. It starts the day of
Okay.
closing when we transfer the old property to the buyer. In order to identify, they're just going to prepare a letter, and the qualified intermediary will provide a form letter to make it super easy. But they just need to provide the street address of the properties they're interested in
And there can
purchasing.
be
The rules allow
multiples.
them to, they can identify up to three
Okay.
properties regardless of their combined fair market
Okay.
value. If they identify more than three, there's a 200% cap on the total amount. But if they identify one, two, or three properties, there's no cap. So if they sold that property for
Okay.
500,000, they could identify three properties that are each $1
Okay. So
million dollars if
that's
that's
done
what they
by
want to
letter,
do.
you said, and that
Yes,
letter
but
comes
they
to you.
don't need an
It
under
comes to you.
contract. Yes, it would
Okay.
come to us by midnight of the
Okay.
45th day. The property does not have to be under contract. But Terry, you know the market way better than I do, and it's a crazy real
Sure.
estate market. So my best advice is to get something under contract during those 45 days so that you could sleep well knowing, hey, I have something under agreement. I think that I'm going to
Yeah.
be okay. You can give yourself a backup if you want. But if you identified three properties on day 45 and none of them were under contract, I don't think anyone would feel confident they would get
Okay.
one of
So
those.
two questions.
The,
Oh
yeah,
yeah,
can I
yeah. I'm
finish the
sorry.
other
Yep. Go ahead.
time? No, no, that's okay. I want to make sure
Yeah.
we get that in. So running at the same time, based on calendar days, not business
Mhm.
days, we have 180 days to reinvest all of our funds and wrap up our
Okay. And that
exchange.
starts at day one of the 45 as well. Oh.
Right, no, it starts
Oh,
at
the
the
closing.
closing.
Okay.
Right. So they're running at the same time. So it's 45 plus another 135 days to wrap
Gotcha.
it all up.
So
Okay. And if I
yeah,
could go back
please
just
do.
for a second, we touched on like kind, but I want to talk a little bit about that because it causes so much
Yeah.
confusion. These are referred to as a like
Mhm.
kind exchange. That's the way the regulations refer to them, but it causes a lot of confusion. The word like kind has nothing to do with the kind of property it is. It has everything to do with your use of the property.
Okay.
So any kind of real property held for business use or investment could qualify. So you can sell a single family rental, which is what most exchanges are, and buy an office building, a shopping center. You could sell a farm and buy 3
Yeah.
townhomes. So there's a lot of flexibility. You can buy anywhere in the US and mix and match any kind of properties. Again, what makes them like kind is your
Yeah,
use
that
of
seems a
it.
little confusing because and that was confusing. You're exactly right for me initially because I'm thinking, okay, what is like kind? Does that mean if I own an office building, I have to go into an office building? Is kind of where I started. If I have a townhome, do I
Yeah,
have to go to a townhome? And what you're saying is, as long as it's, and don't correct me if I'm wrong, but as long as it's used for a business, then I'm using it for a business. I can go ahead
right.
and make that exchange. And it,
Yeah. Or
yeah,
investment,
right,
right? Single
right,
family rental and a multifamily
right.
apartment building, a farm. That's the great thing, right? For a farmer, they can exchange land to buy new land that's contiguous to their property because the farmer next to them is
Right.
selling their property. You know, it's a great strategy. And people often think it's super complicated,
Yeah.
but the bottom line is it's a really easy
So
process.
here's my two questions based upon the last conversation we had. Can we go under contract with that property that we've identified? Let's say we identify it prior to closing. Can we go under contract with that property contingent on closing? Can it be a contingency?
Absolutely, absolutely. And
Okay.
if you take money out of your pocket for the earnest money deposit, when you go to
Yeah.
closing to buy it, if you have enough money in your exchange account, then we can refund your earnest money
Refund that.
deposit as well.
Okay. So that would
Yeah,
help in the 180-day closing if you had it identified, went under contract with a contingency of closing. And I understand there's lots of different things that will hold a contract up, but that was one of my questions. And then the second question is if you identified the 3 properties that you think you would want to buy per a letter, and I'm assuming that's to have a backup. But let's say you get to day 40 and you go, none of these work. What happens? Can I get an extension on that letter? Do I need to go back out and identify other properties? Like what happens in the instance that I'm just can't make my mind up, I guess, or it's not available or what have you?
Totally. That's a great question. And that's exactly why I suggested trying to get properties under
Mm,
contract during
okay.
that time. Because once the day 45 passes, you can't change your identification. If today is day 44 or even day 45, we have till midnight tonight to make some
Oh,
changes to
per the
that.
per the
But
letter.
once midnight hits,
Oh, okay. All
right,
right.
right.
Fantastic.
So once midnight tonight hits, then you're locked into that list. So that's why I usually suggest start looking for your replacement property early because 45 days, heck, that's going to go super super quick. But if you start looking for replacement property while your property is on the
Yeah.
market for
Yeah.
sale, then you're maximizing your
Yeah.
time.
Okay. I like that. That makes a lot of sense to me. Now, one of the other rules that, or call them rules, but requirements was both the relinquished and the replacement properties must be owned by the same party. Now, when you use the term same party, does that mean the same title? In other words,
Right, the
person to
same title
person,
or owner,
LLC to
right?
LLC kind of thing. Is that what that means? Okay. All right.
Exactly. Yeah, so I always think about it as a
Sure.
taxpayer because you think about a taxpayer has a
Yeah.
tax return. That taxpayer has been reporting it on their tax return. So that same taxpayer has to buy the new property to tell IRS on one
Right.
form that they sold the old property and replaced it with another. And that taxpayer can be any individual, it could be a married couple, it could be an entity, it could be a trust. So it's just important that the same taxpayer buy the replacement
Okay.
property.
So that makes sense. That keeps everything legal, keeps everything in line in the sense of who owns it
Yes,
and what the line is. So
right.
we talked a little bit about a qualified intermediary or a QI like you are. So give me like the basics of what a QI does, what your role is, how you get brought into a situation, And then let's talk about generally what does it cost to hire to utilize a qualified intermediary like yourself?
Sure, sure. So the qualified intermediary, as I said, we're an independent party that sole purpose is to facilitate 1031 exchanges. We're a middleman in the transaction. So we're another party. We're going to coordinate all the details with your closing agent. We're going to set up that bank account for your benefit. With 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 our company, I can tell you that
Yep.
for me, I think the most important thing we do is protect other people's
Mm,
money. And right, that's a lot to ask
sure.
somebody else to hold your money and you think, oh my gosh, I'm picking them off the
Yeah.
internet. So we have really worked hard to be super transparent about how the funds
Yeah.
are held. We set it up in a bank account with the client's name and taxpayer identification number attached to it. And then we give them instructions so they can log on to the bank's website anytime, see their account balance, and they're going to get statements from that
Do
bank as
they
well.
have the do
We
they
can
have
use
the ability to choose the bank, or is that a bank that you're set up with?
Um, we usually set it up. If they come to me and say, "Hey, Margot, I'd really like to use this company," we might charge a little bit extra because we have to set up a whole new
Sure.
bank account. But we work with banks that have products specific for
Gotcha.
1031. Because if you're working with me, I want you to be able to go to the bank's website and see your
Right.
account
Right.
on there. And I want you to get bank statements directly from the bank. If I set up a bank account at most banks in my name, even as an agent for you, they're going to send
Right.
everything to me. They're not going to allow someone else to access it. So these are designed specifically for 1031 accounts. And we've worked with those banks to also set up qualified escrow
Right.
agreements that would provide. That's what protects clients from us when we're holding their money. I can't move any money without the client saying, okay, you can do this. And the bank would move the money. And the other thing that we do, we have it set up with these banks that we can utilize a product called an insured cash
Okay.
sweep. Because right now we've seen some bank failures. And what that is a seamless way to spread a client's money out over however many banks is necessary. So no one bank has more than $250,000. So it's 100%
So
FDIC
that's
insured.
an interesting point and a very critical one as far as I'm concerned. So just to back up a little bit, the contact
Yeah.
and agreements you have with the bank, let's call it the bank that you use or the couple banks that you use, is specifically designed so that the client is seeing the money, he's seeing the statements, he can log into his own account, and I'm assuming he can see everything he needs to see on that account. And then
Yes.
the sweep,
Yep.
you called that, what kind of sweep was that?
Insured
Insured
cash
cash
sweep.
sweep. So tell me a little bit about that. Somebody's got, I don't know, $10 million
Sure.
in a 1031
Yep.
exchange. What is a sweep? What does that do for them, and how does that work?
Right. So it's a bank product. So all of the larger banks have it. Some of the community banks have it, depending on all of their bank ratings. There's about 400 banks naturally that
Okay.
participate. And whether you're doing an exchange or
Hmm.
not, if you have more than the FDIC limit in your
Right.
bank account, go in and talk to them about an insured cash
Mm.
sweep and tell them that's where you want your
Mm.
money, because that way you can get 100% FDIC insurance on all of your funds. So it's just a method to make sure that it's 100%
So I think
FDIC
that's
insurance.
something a lot of people don't know. I mean, I didn't I
I
didn't know
agree.
that. And I've been to my bank a couple times when I've maybe crossed over that threshold here and there with cash that I have, and I've said,
Yeah.
"Hey, tell me about, do I need to move money out of your bank to be FDIC insured?" And the bank manager said, "Yeah, yeah, we can't give you. It'd only be, well, can I have two accounts at your bank? Does that qualify?" No, that doesn't qualify. So
No.
this insured cash sweep is a golden nugget, and maybe a lot of you know it and I didn't know it, but
Yes.
that's a pretty good thing even for personalized accounts. Yeah, that's amazing.
Absolutely,
Yeah.
absolutely. And we had a client come and ask
Yeah.
for it, but then I guess it was, when we saw a couple of banks
Yeah.
fail, I guess it was a year and a half ago, and it was Sunday night, and it was like the third bank failure in,
Sure.
less than a week. And there it was, 10 o'clock at night. Signature Bank was the
Yeah.
last one. And this tells you about my banking partners. One of my bankers texted me at 10 o'clock at night. He said, let's talk tomorrow. Let's use an insured
Yeah.
cash sweep. Let's put all your clients' money into it. So they know that I've instilled in them how important it is for my clients to feel comfortable when we're in control of their funds. So our banks are so proactive and come to us and tell us, hey, let's
So
do
I do have a
this.
question about that. Maybe you know the answer, maybe you don't know the answer, but the reason banks love deposits from us, the public, is so they can take those funds and they can utilize them and make money off of our money. So
Mhm.
is there any pushback on those insured sweep accounts from banks to say, hey, we don't want you to move your money? I mean, or is it just something that you ask for, you get? Do we get pushback from those kinds of things?
We we don't get
Yeah.
pushback. No, no. Our banks that
Yeah.
we work with. We've worked with them for a really long time. They are really invested in the
Hmm.
1031 industry, and they continue to design products that are best for us and
Yeah.
our
So there is a
clients.
best practice as far as when it comes to products and those kinds of things.
For sure,
So that's
for
awesome.
sure.
I love the fact
Yeah.
that that's the role, and transparency is big. You've said it a
Mhm.
couple different times, and when
Yes,
I'm dumping all
yes,
that money into an account, I want to make sure that it's one, I can see it, feel it, taste it, touch it,
sure.
and that I know
Yes,
somebody's you know got things set up for me that are important for an exchange or a transfer like that. Um, so
yep.
I've got two properties, one that's under contract and one that I've identified, and I come to Terry Barr from Coldwell Banker, and I say I need somebody to do this 1031 exchange for me. How do I initiate? How do you initiate with a person like yourself, a qualified an intermediator?
Sure. So it's as simple as shooting me an email or giving me a phone call or having your client call directly. We can, do a Zoom conference or
Yeah,
a phone call, whatever is easiest. But it's just a matter of reaching out. We always like to walk through the transaction. As a qualified intermediary, I can't give tax or legal advice, but I can explain the 1031 requirements. I can look for potential red flags that I think we should address. Maybe pull your accountant into the
sure.
situation and get a little bit more
Hmm.
information. But then we would, in order to get started, look for a copy of the agreement of sale and the contact information for the party handling the closing. And the qualified intermediary would reach out to that closing agent. We would get the necessary documentation from them to initiate the exchange, prepare all the documentation, send them instructions. We're going to look at the closing statements to look for identify any potential red flags that might create a taxable event so we could
Yeah,
address it super early before we close. The qualified intermediary will enter into or prepare the exchange agreement that
right.
we have to enter into and keep them aware of all the time deadlines and really hold their hand through the whole
Yeah.
process to keep this super
Yeah,
easy.
I think well, I know from my experience and from my past when I was in finance, and I worked with a lot of estate planning attorneys and CPAs and accountants and those types of things. And I think the overriding message outside of the specific content that we're giving is, if you're going to do something that can cause you a gigantic taxable event or can be complicated like this, the best thing you can do is bring a team of experts to the table together on your behalf. And I know we did a lot of that in finance. We did a lot of that in estate planning. And I find this to be very similar, that you would be one of those team members that brings a service to the table to present to the rest of the team. And I think one of the difficulties and one of the missteps that a lot of folks have is they think that the attorney, their family attorney, can cover everything, their family CPA can cover everything. And that is not typically something that happens in this day and age. A lot of folks have family attorneys from way back when, And those folks are bringing in experts. They're making sure that they're bringing in experts to provide those services. So, in my opinion, and you can speak to this, the overriding message here is this is another teammate for you to bring onto your team to help provide that
Exactly.
service to get you to where you're going, whether it's estate planning and business and what have you.
Absolutely. And that is just 100% accurate. My top referral sources are accountants and
Yeah.
attorneys. So they recognize that you need to use a qualified intermediary. They can't handle that part of it. So they may be really helpful in um, maybe helping you evaluate which is the best replacement property long
Mm-hmm.
term. They can help you analyze, hey, what is my tax consequence when I
Mm-hmm.
sell? Is the 1031 the right
Right.
strategy for me? But this is quite frankly an area of expertise, and it's such a small little section of the tax code. So I always think of it like your family
Mm-hmm.
doctor, right? When you have a heart issue, they refer you to the
Right.
cardiologist, and you work together to find the best solution for the
Yeah,
patient.
I find this
And
has
this is
so many
yeah,
requirements, but they're contained. These requirements are kind of contained
yes,
around this one code, this 1031 code, and to have an expert that can lay everything out there and to give you the rules. If you do this, you need to do that, and this is the timing behind it, and we'll hold your hand and we'll set up the accounts, and we'll work with your team members, whether it's the real estate agent and the attorney and the CPA and whoever. So that's a tremendous service. What's something like that? What's something like that cost me as a consumer to come and hire you or your company?
that's it's a really nominal charge. If someone's selling something for $1 million, we're just going to charge $1,250 for the
Wow.
sale, and that it will include the sale of their old property and the purchase of the
Wow.
new property. So it's a pretty nominal expense when you're looking at the whole
Hmm.
transaction, but the
For
benefits are
sure.
huge.
Now, does that escalate with the value of,
Yeah, if someone
yeah.
is selling something for $15 million, I think it's going to be seventeen
Yeah,
hundred and
that's
fifty
amazing. It
dollars.
seems like to me to guarantee you're following the rules. And quite frankly, I know people in this business, in this real estate real estate space, if you will, that have done 1031 exchanges or claimed them, and they aren't following the rules. And I wonder at what point does that throw up a flag to the IRS, and they come back and have to recapture all these taxes. I mean, it
Right.
seems pretty scary to me. But um, anyway, I wanted to thank you. I know you were a little bit under the weather, had a scratchy throat. You sounded great, and I
Thank
appreciate
you.
that. But it was such a light bulb for me, and you did such a nice job the first time around, and to have you on and to go over some of these rules. I want to thank you for that, Margot McDonald from 1031 Corp. If you have an interest in a 1031 exchange and you've never done one, or you have done one and you're always looking for that IQ, that QI, that qualified intermediary, give me a call at terrybarrealestate.com, or email me or call me at the number that'll be on your screen, and I will get you in touch with her. And she's going to be somebody that can walk you through, hold your hand. Obviously, by today's conversation, she knows exactly what she's doing. That's what I loved about her the first time around. So give us a call or go to the website, terrybarrealestate.com. We'll get you in touch with her, and I don't think you'll be disappointed in this one. So thanks for coming on, Margot. I appreciate your time in the middle of the week. So it's been a pleasure, and I hope to
Oh,
talk to
my
you soon.
pleasure.